The United States stock market erupted higher today, largely based upon Federal Reserve Chairman Jay Powell's language when he said the Fed would act as appropriate. That was in regards to how they will handle things now that we find ourselves in a prolonged trade war with China. And the stock market interpreted that as a suggestion that an interest rate cut is more likely than not later this year. We'll see if that happens to be the case. But for one day, the markets were joyous over those comments. In fact, we had the largest one-day move since January, and that wasn't entirely surprising. As those of you that have been watching this video know, over the last week, we've had oversold cluster signals in all four of our major equity markets. So great to see all of them up over 2% here today. We'll see if that momentum can continue or not. In our trade application example tonight, I'm going to show you an example of a stock that's breaking out of a downward channel to see if we can play some upside in a restaurant stock. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's June 4th, 2019. First of all, if you are new, we would encourage you to go over to YouTube, click subscribe. Once you're over there, make sure you check out our description area where you can sign up for our email distribution list, which gives you a heads up whenever we produce these videos. And at the bottom of those emails, you can also find all of the overbought and oversold cluster signals within the S&P 500. In addition to YouTube, we're heavy users of Twitter. My handle is @BrandonVanZee. I'd encourage you to follow me, and thank you to everybody who clicks like and retweet on these Market Outlook related posts. In addition to that, we have a presence on Facebook. Feel free to join us at our group embedded in the logo in front of you. All right, let's go ahead and dive into the charts. As you can see, I've got chart 4B pulled up here in front of us. This is a 4-grid that will look at the market forecast indicator across all four of the major U.S. equity indices. As you can see from the background colors of the charts, they will signify whether we have a bullish or bearish posture on those securities from an intermediate term perspective. Remember, there's really three different postures that are taking place on each one of the market forecast charts. We have a momentum posture, a near-term posture, and a intermediate posture. And so by default, we typically use the intermediate as our posture setting device unless you hear us say otherwise. So our longer term, not necessarily longer term, but intermediate term trends still are to the downside. Despite today's big move, I mentioned in the intro, all of these indices were up over 2%. So you can see the S&P 500 was up 2.14%. We had the Dow Jones up 2.06%. The NASDAQ was up 2.65%. And the Russell 2000 was up 2.62%. So huge days across the board for all four of these indices. But we continue to have that bearish posture right now. So we're not quite convinced this is the end of that downward swoon that started about 6 weeks ago, but at least it's a good start. And as we mentioned here in the past week, we have been receiving lots of oversold cluster signals to let us know that we were a bit of a coiled spring waiting for a day like this to unfold. Now, we might not have expected it to be a full 2% move. A 1% move would have also been an exciting day. But nonetheless, we did get a nice little bounce out of those oversold conditions. As a reminder, you can see those oversold conditions on this chart 4B by looking for those little green dots that you'll see plotted on the price chart and also down below on the market forecast indicator. As a reminder, if you are looking at this on a smaller screen, for those of you that are premium members of Market Scholars that have loaded up this chart strategies here that we have, you might need to right click on the chart and go to maximize cell to see all of the information down below. So again, we've seen things shake out pretty well from a cluster perspective on the S&P 500 in the last 3 months. You can see over here, we had what was known as an overbought cluster that showed up here on April 26th. That occurs when we have the green, the red, and the blue lines on the market forecast closing above 80 on the same day. So that's known as an overbought cluster signal where a downward move might be on the horizon. Of course, we ended up having that in a big time way. What we've found from history is that the overbought clusters tend not to work quite as well as the oversold clusters, but nonetheless, this is a great example of a time where had you lightened up your bullish positions once you saw that overbought cluster signal right there, you would have benefited as you watched the stock market kind of melt down for the next month and a half. Well, it melted down so quickly and so violently that we've got the exact opposite condition that occurred here within the last couple of trading sessions, and that's when you have the green, the red, and the blue lines all in the lower reversal zone on the same day, where you see that little green dot plotted there. That's known as an oversold cluster signal, where the expectation is that we don't have a continued move lower to quite the same degree as the condition that brought it into that particular setup right there. So oftentimes what we find is a snapback type of a rally. Now notice in this case over here, it took about 3 days before the market topped out, and in this case right here, it took an extra day before the bottom, or before the bounce of the market took hold there. So don't expect these cluster signals to be some sort of a cure-all where you bet the farm one way or another. There is no technical analysis indicator that can be 100% perfect, but you can kind of get a sense here by just looking at the last 3 months of action on the S&P 500 why those overbought and oversold cluster signals could be somewhat useful if you are somebody that's comfortable with the idea of being a bit counter trend. You'll notice over here as I kind of scroll through to the Dow Jones, we also had an oversold cluster signal on the Dow Jones Industrial Average a couple of days ago, and of course a nice rally out of that condition. If I were to continue to cycle through here now to the NASDAQ Composite, you can see we actually had 2 straight oversold cluster signals on the NASDAQ, and this one actually represent a little bit better, timing-wise from the cluster perspective. You'll note here on the NASDAQ, we had our overbought cluster signal that occurred on April 29th. And that was the actual top of the market right there. And then you will see that if yesterday's candle ultimately ends up being the low for, let's say, the next few weeks, that this kind of called the low as well with that oversold cluster signal. So overbought cluster signal, oversold cluster signal, both of them kind of doing some nice reversion to the mean thus far. And then last but not least, here's our Russell 2000, where we did have 2 in a row oversold cluster signals here as well. Those were a couple of trading sessions ago. And again, this massive candle that we experienced here today brought us well above even that first cluster signal that we saw right there. So we'll see if that can carry some momentum forward. I do know that, we've got a trade meeting set up with Mexico tomorrow, and I believe Vice President Pence is going to be in charge of that, so we'll see if there's any new news that comes out of that. But right now, at least we've got a one-day reprieve, which feels pretty good after the very difficult May that we had to suffer through. So we'll see if it has any follow-through for us. Right now, again, I do want to stress that we continue to have that bearish posture with that downtrending 30-day moving average here. But if this ultimately becomes the bottom, it's got to start somewhere. So, only time will tell whether that's a true Band-Aid that took place or whether this is just going to end up being a dead cat bounce. But it's at least we're off to the races here on a one-day basis. Let's go ahead and take a look at our next chart setup now. This will be chart 4C. This is our 3 green arrows chart setup, or in this particular case, 3 red arrows. As I mentioned in last night's presentation, you can see that we have this pink background color across all 4 of our charts right now on this chart 4C setup here. And what that refers to is that we have red arrows on 3 different important technical indicators. In terms of the S&P 500, you can see we've got the red arrow on the moving average over here on May 7th. We've had a red arrow on the MACD since May 1st, and we've had a red arrow on the stochastics. It's kind of a phantom red arrow basically since May 23rd right there. So with today's big move higher, we were not able to regain any green arrows. We remain with 3 red arrows across the board. So it's going to take a little bit more work, a little bit more convincing from the market before some of those technical indicators can start floating back over to the positive territory. territory. Let's go ahead and take a look at our 1040 crossover method chart now. And this is chart 4D. As a reminder, this will be a longer term chart, 3 years in length, and each one of the candles represents 1 week in length as opposed to 1 day like we saw on the other charts so far. So this is meant to kind of give us a sense of longer term trends. And right now the only concern that we have is the Russell 2000 does have what's known as a death cross that took place as of last week when that orange line crossed below the blue line, and so that means the 10-week moving average crossed below the 40-week moving average and can be kind of interpreted as bearish price action out of the Russell 2000. The other 3 charts continue to have positive crossovers, although there is a lot of wear and tear on the charts themselves. Price action is below the moving averages. It's just that the moving averages have not yet crossed. And so if we do get a big rally off of the lows here in the coming weeks, it is possible that we kind of throw a little bit of a Hail Mary there, and some of these moving averages that appear to be getting close to crossing over will start working their way back higher again, and it might end up just being a little bit of a head fake there. So we'll keep our eye on that story and fill you in as we see anything new, but the main thing to point out here in this case is we do have that death cross on the Russell 2000. Moving right along now to our intermarket analysis chart. This is chart 4E. Reminder that on these charts here, the background color of the chart will determine whether we are bullish or bearish using that market forecast intermediate term line. And so as you can see here on this first set of 12 grids, which is chart 4E, we do have, looks like 5 bullish charts on the board, and those charts are the MLPs, U.S. government long bonds, foreign bonds, gold, and ag commodities. The trends of those are kind of, there's a variety of trends, I guess you would say. And the one that appears to be the strongest to me and the most consistent is actually foreign bonds. Not the most exciting place to be hanging out, but this has been the case for the last several weeks, that this particular ticker symbol BNDX continues to have a nice upward trajectory there. We had quite a nice upward trajectory with U.S. government long bonds as well up until today. Now, of course, when the market starts getting into more of a risk-on mentality again, like we saw today with the stock market erupting higher, oftentimes money does leave kind of the more boring and safe areas of the financial world, like government bonds, and it goes back into the stock market. So perhaps a little bit of that action playing out here today, as U.S. government bonds were down over 1% here today, and of course that means that the opposite of that is true as well, which is interest rates went up a little bit here today. Interest rates remain extremely low. The 10-year is currently at 2.11, and that's our one of our lowest levels that we've had in many, many months. And so we don't want to make too much of it, but I think a lot of people kind of get the sense that things were getting a bit overheated in the bond markets, and perhaps today is a little bit of a pinprick into that balloon that seemed to be rising day after day after day. And we'll see if that will continue or whether we have a little bit of reversion to the mean here. You can see that junk bonds erupted higher here today as well. That's a nice candle right there on JNK, and so that's one thing that we've been kind of paying attention to, is that we had a little bit of divergence there between government bonds and junk bonds. Of course, junk bonds are corporate bonds from companies that have less than stellar credit reports or credit ratings. And so today, when we have a risk-on mentality and market participants are willing to kind of think about that risk and have that manifested through the stock market itself, we also saw that manifested in the income markets with junk bonds clearly outpacing TLT. In fact, it's almost an exact opposite. TLT, government long bonds, went down significantly. Corporate junk bonds went up significantly here today. The US dollar remains below that moving average for the second straight day, and remember, that hasn't happened for quite some time. The last time we spent a few days below the moving average was way back here in March. Otherwise, we've been in a nice upward trajectory there for UUP, but it does kind of, you get that feeling it's a bit heavy up at these areas after the US dollar has been so strong for as long as it has. So a lot of people have been waiting for quite some time for the US dollar to cool off. Maybe this is that time here, as we now have have suffered through our third straight day to the downside on the US dollar. Let's go ahead and take a look at our next chart setup now, and this will be chart 4F. These will be the foreign stock markets here. And as you can see, we've got a mixed bag in terms of bullish versus bearish charts here. The bullish ones are largely up here towards the top. You can see Brazil has a bullish posture, Russia has a bullish posture, India has a bullish posture, Mexico has a bullish posture, Australia has a bullish posture, and then South Africa has a bullish posture. Now again, some of these charts look a little bit better than others. I wouldn't necessarily get overly excited about South Africa, but keep in mind, gold has broken out here in the last 48 hours. There are a lot more gold mining stocks in South Africa than there are in other nations. So there could be something behind that. In fact, I think even in this this paper money account that we have here, I believe we have a position on GFI still. That was that low price gold mining stock that we bought some shares of. I believe it might have been in January of this year when it was first starting to break out, and it didn't do anything for several months, and then all of a sudden, I don't know if you guys have caught this, but in the last week or so, this thing has just absolutely erupted higher, basically in a straight line there. So GFI is an example of one of those South African gold mining companies that's out there. When you're looking at the various trends, I would say that Russia and India are holding up better than some of the others. I would also kind of put Australia into that camp. Notice that Australia is very close to multi-month highs. We're not quite there the way that we were with India yesterday and with Russia yesterday, but with today's big move higher on Australia, we're right in that vicinity, getting very, very close to hitting new multi-month highs there. So seems to be a little bit of bullish action there with Australia. Keep your eyes on that story. Let's go ahead and now take a look at the US sectors. This is going to be chart 4G. And as we look at this, we do have a more positive view towards things. Remember, yesterday we were going through these charts and we had a clean sweep for the bears. Now, of course, a big 2% move higher like we saw today is going to change the shape of many of these charts, and of course, many of them for the positive. Now, one of the things that caught my eye yesterday that I mentioned in the video was materials. I mentioned at that time that we were planning on talking about the materials sector in my dividend growth investing class here today, which we ultimately did. So for those of you that are premium members of Market Scholars, feel free to check out the recording of that class that is posted in our events calendar. But nonetheless, you can see here that materials had a second straight huge up day. XLB was up 2.8% today after being up 3% yesterday. So something is brewing there in the materials space. Keep your eye on that one. We also find that the bottom rung is now all green. And again, pretty impressive considering yesterday they were all red. So we had enough of a move higher in healthcare, staples, utilities, and real estate here today to give us those bullish postures. Now remember, those are all largely defensive types of sectors there. So if you are anticipating a big market rally going forward, it's possible that a lot of the moves have been made for these particular sectors down here, and you might speculate a bit more on some of the areas that had been beat up a bit more, right? So, you know, you can look at something like discretionary here that had an oversold cluster signal just yesterday. It erupted higher here by 2.71% today. We also had technology having an oversold cluster signal yesterday. It erupted higher here today. We also had communications. That was an oversold cluster signal yesterday. It went up today. It probably wasn't quite as emphatic. Remember, that one has been in the news a bit more because of some of these antitrust rumors that are going around with Alphabet and Facebook and a few of those that are in the communication space. But nonetheless, a nice rally, a nice 2% day out of those. Financials had a spectacular day. They were up 2.7%. So, you know, a lot of these areas that had been beat up the most to the point where they were receiving oversold cluster signals were the ones that did the best here today as well. Again, technology up over 3% here today. I did see that there was a tech stock that was reporting after hours tonight, and that is CRM. That is Salesforce.com. So let's check in on that very quickly here, and you can see that Salesforce is up about $3 after hours. It closed the session at 150.81. It's trading at around $153 or thereabouts right now. So that was one big one. I also saw another separate news story come out this afternoon on Skyworks Solutions saying that they were going to be cutting ties with Huawei, the big Chinese telecom firm. And so that one does have some activity after hours here tonight as well. It is down just a touch, but probably wouldn't impact the markets to a large degree because it looks like it's down less than $1 after hours. But nonetheless, technology, a big mover here today. Now, I do want to point out another thing while we're over here on the internet. With the sector selector, you'll recall that technology actually moved back into the third slot on my sector selector, along with utilities and real estate. Of course, those top two are largely driven by interest rate activity, whereas technology kind of stands on its own 2 feet. It's not necessarily a macro effect that pushes technology around the way that interest rates push real estate and utilities around. So it's good to see that technology was already kind of holding its ground prior to today, and then our confirmation of even further upside action today with technology stocks up over 3% on the whole. That was a very strong sign right there. Also, I wanted to say thank you to everybody who did click like on last night's Market Outlook Twitter post. You guys rose to the occasion there, and I really do appreciate that. 109 of you came out of the woodwork to click like. Please continue to do that. It lets David and I know that you guys appreciate these videos, and you want us to continue doing them on a daily basis. We kind of look towards the likes and retweets that we get on Twitter as our scorecard on whether the types of things that we spend our time on are being worthwhile and useful or not. So if you do get value out of these videos, it's in your own best interest to continue to click like over on Twitter if you want to see us continue in these videos in the same type of format. All right, let's go ahead and now talk about our trade application example here for the day. Wanted to spend a bit of time in a discretionary area that had been beat up. And so for this, I'm going to come on over here to chart 4A, and I want to show you Jack in the Box. So Jack in the Box was up 3% today. So that all by itself, maybe not such an impactful statement considering that there were a lot of stocks up 3% here today. In fact, one of the things that we should have done, let's go on over here to the Market Watch tab real quick. And I'm going to go over here to visualize and give you a sense of like the breadth of the overall market. You can see a lot of green on the charts here on the heat map, but another thing that you can do is come up here to where it says heat map and change that over to index watch. And then from here you can pull up like a watch list. Let's just use the S&P 500 here in this case. And I'm going to the public watch list. There's the S&P 500. And you can see here what a lopsided day we experienced today. Out of the 503 stocks in the S&P 500, I know that sounds goofy, but there's a couple of stocks that have multiple share classes in there. But right around 500 securities are represented. We had 452 that finished green today and only 51 that finished red. So that is a lopsided day for the bulls, a very substantial and important, emphatic upside day that a lot of people have been waiting for several weeks at this point. All right, let's go back to Jack in the Box here. I wanted to point out that this stock is starting to give some pretty strong price signals to us. First of all, you'll notice that it does have a bullish market forecast posture. We know that because the background color of this chart, which is on chart 4A, is green, and that tells us that this green line, the intermediate line on the market forecast, is either trending higher between 20 and 80 or simply in the upper reversal zone. So on this big candle over here on May 30th, it basically gave us a bullish posture on that day because the green line started rising on that day, and it continued to do so. Now today, it rose so much that the green line is in the upper reversal zone. It's above 80. So any one of those conditions would have been considered bullish, and that's why this background color has been green for basically the last 4 candles or so right there. Now you'll notice that was an important move out of that particular chart because it did allow the chart to now be breaking out of an important resistance area. Notice that we had a bit of a double top that was taking place here between basically the first week of April and right on over here mid-May time period. You'll also notice that we had a nice double bottom that was taking place there as well. So there was some strong support that was already being built into this stock. And remember that the stock market itself was largely struggling until yesterday. So in other words, Jack in the Box has been a relative outperformer here for the last couple of weeks because it's been trying to make its move higher at the same time where it felt like the stock market was going down basically every single day. Now, if we start to widen our view even further out, you'll notice that if I go out to, let's say, a 1-year daily candle chart here, that bottom that's been formed here has been in the works ever since basically October of last year. So we're talking about like a 6 to 7 month bottoming process that's been taking place here. Remember, a lot of other stocks had been hitting new lows along the way. So this one has been holding the line, as it were. Now, if I were to start kind of painting this up with some lines, let me get my drawn items out here and let's go on over here to a trend line. First of all, you can kind of get a sense of, some of that downside support there, that black line that I just drew. So let me right click and let's edit that. Let's make this a lot bigger and maybe let's make this blue so you can see it on the chart nice and easy. So that's kind of your support area that we're dealing with there. And then you can also see that we've had some interesting developments here in terms of lower highs that took place for much of the last year up until recently. So I'm just going to draw that downtrend line on the chart there. And then let me right click on that and edit those properties. Let's change this to a weight of 5 and blue color as well. And you can kind of see that this stock has now broken up clearly above that downward trending resistance line that you see on that chart. In fact, you can see that it actually attempted to break out right on over here on the actually it was May 17th time period. It broke above that blue line right here, and then it faded. It faded back in there where it gave somebody the thought that perhaps that was just a head fake. Well, notice where it caught its kind of support, right at that important juncture where that blue line occurred. So in other words, this old resistance right here on this downward trending blue line became the new support right here, and that was used as a launch pad higher. Now notice that this candle is well above this prior high, well above this prior high, and is starting to approach this higher high over here. So as this process is starting, you can see a clearly defined support area at the bottom here. So what I thought we would do for our trade application here tonight is just kind of play this from a stock perspective, but it would be more of a kind of a price target type of a trade. It's not necessarily a trend trade the way that we focused on last night's trade idea. So for this, what I'm going to do, actually, hang on just a second. I'm going to go back over to the internet and I want to pull up the position sizing calculator that I use for my swing trading class, which I'll actually be hosting tomorrow for those of you that are premium members of Market Scholars. So let me just pull up this position sizing calculator here, and it'll pull up as an Excel spreadsheet. So give me just a second here. It's coming up on the other monitor here. So let me swing that into our view. There we go. And we'll kind of use this to help us establish our positions. And so if we were to maintain a 1-for-1 reward risk ratio, which is what we typically would do in some of my classes, one of the more important low points on this chart here in the last couple of months is right here, this candle that I'm pointing at. In fact, let me kind of zoom in on that area so you guys can see it a little bit better. It's this candle right here. And you'll notice that the low point of that candle was 75.80. And I'm getting that number right up here where it says L colon. If I, again, point at that candle, you'll see up there it says the low was 75.80. So a lot of times what we do is just put our stop loss a couple of pennies below that with the thought that, hey, we recognize that a trend reversal is taking place here. If we're wrong with that assumption, then we will find out we're wrong if the stock is to close below this candle over here. Then it will be telling us that the stock is not in a reversal situation. In fact, it's continuing its downtrend that it had from the months before. So let me use that position sizing calculator to help us determine where we might want to put our price target if we use that mentality. So if we had our stop loss at 75, let's call it, I don't know, 78, a couple of pennies below the low of that candle I mentioned a moment ago, and we think we're going to buy it at approximately where it closed here in tonight's session, which was 84.51, then down below here it shows that our price target would be 93.24. So that's kind of the trade that we will shoot for. 93.24 will be kind of up in this vicinity up here, and I do believe that that is kind of where it was trading a few months back. Yeah, you'll notice that the highest it got to over here in August of last year was up there above 93.24, which would be our price target. So in other words, we wouldn't need it to hit a one-year high. We would just need to get in that vicinity of that. So in order to place that trade, what I'm going to do is I'm going to come over here, right-click on the chart. I'm going to go to buy custom with OCO bracket. I'm just going to leave this as 100 shares here, but of course do your own position sizing for your own size of account. I'm just going to leave it in as the default shares for right now. And I will put this in at 84.57, which I guess is very close to where we closed here today. I'll just leave it in there as a limit order for the day. So in other words, we'll see if we can get filled on it tomorrow. In this first pink line that you see here, that is going to be our upside price target, which I mentioned before we'll put in at 93.24, and we will change that to a good till cancel order right there. And then on that stop line directly below it, we're going to change that from a day to good till cancel as well. And then our stop price down below would be 75.78, as I mentioned before. So that should allow us to maintain about a 1-for-1 reward to risk ratio. Let's go ahead and click confirm and send and ship that off and see if we can get filled first thing in the morning. All right, well, thank you for joining me here tonight. A fun day in the market where we finally got, some big upside action. A lot of stocks up 2, 3, 4, 5%. So sign of a nice, healthy rally across the board today. We'll see where it takes us. Remember, the posture from an intermediate term perspective remains bearish. So we need a few more days like this to start turning that posture around, but at least it's a start. So we'll see if the meeting between the United States and Mexico brings us any new news tomorrow on that trade front as well. And of course, as always, if you get value out of these videos, make sure you click like over on Twitter for us. We really appreciate that. Have yourself a great rest of the day and best of success with your trades. Goodbye for now.